All right, so here, Nick. All right, so I want to get clear on what is legitimate versus illegitimate debt. Right?
Gotcha.
I want you to talk about that, and if we could, I want to start off with, can we make an analogy of like something in my life? What in my life is a legitimate debt versus an illegitimate debt?
Absolutely.
Okay.
Because this is one of the things that brought about the creation of Bitcoin in the first place.
Okay.
So, I'm going to need to use the whiteboard here.
Please, perfect. Yeah.
So, debt needs two principles in order to be legitimate. It needs to be consensual.
Consensual?
Yes, which
Okay.
means no one can force you into debt and then say, oh, you're in debt.
Right.
No one can come up to you and say, and shove $50 in your hand and say, now you owe me $50.
Right. Okay, so
That makes
consensual
no
means
sense.
almost like a credit card. I make the decision. I
Exactly.
want to buy these 4 tires for my car.
Exactly.
I made a consensual agreement to then borrow that money or go into debt.
Exactly.
Okay, all right, I got that.
100%. It
Consensual.
must be your decision.
Yay. Okay, you can do that.
Decision. I'm probably spelling some of this wrong, but I'm just going to roll with it.
All right.
So, that is the first step. The second step is that it needs to be a reasonable amount of money and pay offable over a reasonable period of time.
Okay, it needs to be a reasonable amount of money, and it needs to be, he said, pay offable. So
pay offable is
yeah.
a word I just made up.
Yeah, no, but that's beautiful because we can.
The point is, you cannot take on debt that is beyond your ability to repay.
Right, exactly.
Within a reasonable time frame.
Exactly.
So it has to be, I'm just going to use the word, pay
Payoffable.
offable.
Now, I don't want to get off on track or whatever, but it seems like some of the housing crash, when people got involved in that wasn't a payoffable situation.
Exactly.
And that
You are skipping ahead of me.
Okay, but I'm not. I'm sorry. But that's it. That's
You are skipping ahead.
I'm sorry about that, man. I'm sorry about that.
No, it's fine.
Okay.
We are going to have to change our order.
Oh no, because of me?
Yep.
Oh man.
Illegitimate.
All right.
Illegitimate debt
All right. Illegitimate debt.
breaks both of these.
Right. Now, for some of you guys, when you see these words, consensual, reasonable payoff, illegitimate debt, you may think about your ex-girlfriend or your ex-boyfriend because there's a lot of illegitimate and legitimate thought there.
We're not going to go into whether a couple decides to take on this debt or whatever. That's a whole separate thing. We're just talking about one person.
Yes.
And was it your decision, and is it pay offable?
Okay.
So first, we're going to skip ahead to housing.
Okay.
Because housing, society tells you are supposed to get a house. You are supposed to, this is the next step of what you are supposed to do. You're supposed to buy a house and own a home, and this is it, right?
Right. It's almost like your identity is built in it. If you don't have a house, you're not a real person.
Exactly. Perfect.
Right.
Almost like your identity is built into it. If you don't have this, if you were just ping-ponging around between an apartment or whatever.
Right. You're not even a human being.
Exactly. So
that conditioning.
It's so consensual for housing. One of these is already broken because you get railroaded into it. You are presumed to supposed to be doing this.
Okay, so there's a somewhat of indoctrination.
Exactly.
Is that right? So we're kind of conditioned to take on this larger debt. If I can, you're saying it needs to be consensual, but if you've been not bamboozled, but if you've been conditioned in a sense that you may not be of the right mind, you want to do what everyone else is doing.
Exactly.
It may feel consensual, but you've been played.
Exactly.
Okay.
Not consensual because you've been played.
Okay.
Because you've been played.
Yeah, I like that. We should. There should be a game show called "You've Been Played," right? Get up there and
Exactly.
Instead of winning money, you go into debt in that. Could you imagine that show?
See, the funny thing is that's not a game show. That's actual.
That's actual.
That's not how the structure actually works. But we're going to get to that right now because housing costs are often not reasonable. They are not pay offable.
Right.
We had discussed in a different program how housing actually costs maybe 50 grand to create on average. We're not talking about a mansion. We're not talking about anything way out there.
Yeah, you're just talking about a standard flat with 2 bedrooms and a bath.
Exactly.
You know what I mean? It should take less than, $100,000 to buy.
Way less.
Okay.
Even counting labor costs, even counting materials, even counting this, utility hookup, you add all that stuff together, it's not even 50 grand.
Yeah.
And somehow,
But he hasn't shopped at Home Depot in a while because every time I walk.
even when you shop at Home Depot, even shopping at Home Depot, even with the inflation,
Yeah. No, it's not still. Okay, so it's not reasonable. You're saying it's not reasonable.
it's not reasonable.
He's saying that housing is not reasonable.
Because housing it's a basic. Everyone needs housing.
Oh, okay.
And it needs to be affordable to anyone.
Okay.
Even those who are not on the median. It
Okay.
needs to be affordable to anyone, even those on the minimum wage. It used to be maybe decades and decades ago, that when you were at McDonald's, that was just kind of a, you can do that when you're a teenager, but then you're going to go and get a real job after that, right? And now that's all gone, thanks to China. And it wasn't really China's fault. It was Nixon's fault for opening up trade with China, but that's a whole different deal. Macroeconomics made the quote-unquote real jobs go away, at least on a structural level. So now, grown adults are at McDonald's, when decades ago that was not the case. But grown adults are still expected to pay for their house. So how are they going to do this? And Jerome Powell and his circus clowns say, oh, well, you're just going to have a dual income. You're going to have mom work and dad work, and that's how it's going to be, right? Which seems to make sense. All right, the kids are in school, whatever. Except there's a tiny problem. If you have a house, you are supposed to have kids, right? In general, you could have a house and not have kids, but who's going to do that? You're supposed to have a house, you're supposed to have kids. So,
Would you have a house without kids? Think about that. Think about that.
You probably wouldn't.
Okay.
So, when the kids come along, there are 5-6 years in between, at least, between infancy and preschool. Between when one parent or the other has to stay home with the kids and one parent or the other has to go in.
Or
That's
should.
if you only have one kid.
Yeah, I should, yeah.
Let's say you have 2.
Yes.
If you have 2, that's not just 5 years, that's more like 10 years.
Yes.
So you have 5 to 10 years where you cannot make that payment if you don't have one of these mythical, quote-unquote, real jobs, which used to exist all over the place.
Interesting.
There used to be unions, there used to be factories, there used to be all kinds of stuff, and they paid well. That was the, quote-unquote, economic golden age of the 50s, when the American dream was attainable.
Right.
And all this kind of stuff was going on. But now, all of a sudden, it's McDonald's as far as the eye can see. So what are we supposed to do when we have 2 adults and only one of them, because one of them has to stay home with the kids. So you can't have dual income for those 5 to 10 years. How are they supposed to pay for their thing? Jerome Powell says that's not my problem. And you have societal consequences because of this. So this used to be reasonable at one point in the past, but it's not reasonable anymore. And if you want to do the hard math, divide $300,000, which is the median price of a home.
300,000
Divide that by 15.
by 15.
That's a 15-year mortgage.
That's a 15-year mortgage, right?
That's a 15-year mortgage.
Right.
And then compare that to the monthly salary on minimum wage.
Okay.
Tell me what you get. Do they add up?
Let's do it. Let's add it up right now.
Add it up right now?
30,
All right.
300,000, 15 goes in there. That's going to be 2. That's going to be what? 2,000 a month?
I was going to let everyone do it, but we will do the...
Let's do it. Let's do it.
We're going to do the math on screen.
Let's do
And
it.
so maybe Jerome Powell is going to watch it, and maybe
Yeah.
Jerome Powell is going to say, Maybe if Jerome Powell actually sees the math, we're just going to type in calculator
Okay.
on our Linux here.
So for those of you that are fast on the draw, you're probably ahead of us right now.
You may be ahead of
20 what?
20,000.
20.
we're gonna do-
20,000 a year. That's 20,000 a year? Yeah. So divide that by 12.
We're going to divide that by 15.
What? My 15-year mortgage?
15-year mortgage first. Then
Okay.
we're going to do a 30-year.
Okay.
20,000.
Yeah.
All right. So we have 20,000.
That's a year, and then
We're going to
divide
divide
that.
that by 12. So what's your month? We're not even talking interest.
We're not even talking
we're
interest.
pretending there's no interest.
But
Ooh, look at this. $1,666. So,
I guarantee you though, I guarantee you there's at least an additional $600 on that.
At least.
For interest.
Oh yeah. So
least-
let's say we have 1,600. In fact, I'm just going to get a notepad here because this is tax debtor.
Yeah. And when I go to my Zillow account, I do that. They have like a little mortgage calculator. So for those of you that are looking for something, we're doing long form here, so to speak.
1,600. So this is your interest-free payment.
Yeah. But you guys, please just tag on at least $500 more for interest.
Exactly. So
and
we're
then
just gonna
add on your insurance as well.
Ooh, insurance.
And
That's
then
going to be at least
don't
$150.
forget your taxes. So you got the PITI, principal, interest, tax, and insurance. You could probably add at least another $700 onto this particular payment, depending on where you
Let's
are.
jack it up to $2,600 a month.
Okay.
All right.
$2,600 a month.
So now-
that sounds a little bit more reasonable for a $300,000 home. Maybe.
So now,
Is he high?
California, 300,000?
No, not California.
general.
Where he's using a national mean.
Oh.
Yeah, nationally.
Because in
But
California,
National.
300,000.
no.
The attic or something.
the attic, exactly. That's not going to get you anything here. We're just talking in general. So if we're talking the national mean, let's try the national minimum wage of $8 an hour. You want to laugh?
Is that what is an hour? The national average?
Did they jack it up to 10?
I don't know. So fact check that. Somebody find out.
It depends on the
state, yeah,
On the
yeah.
state.
Depends on the
Yeah,
city.
they're trying. Yeah, and that's why the national. We won't even get into that. But the $15, they want to try to do a blanket 15. But somebody who may be in one area, 15 is not going to be as valuable.
It's not going to be enough.
And then
Another
for
area.
some people, that's like,
That's way too much.
yeah, that's crazy.
Yeah, it's very much depends by region. But
Yeah.
since we're just going the
14 for California
14 what?
per hour.
Okay,
$14
okay.
per hour, but we're not going California.
All right, so
we're just
anyhow,
going to go
so
national.
Nick is at 26 right now for the average house payment. Even if you wanted to be, like if you wanted to chisel that down to 22, let's say 22 to 26 for a $300,000 home. And then we take the average $8 an hour situation. Let's do simple math. Oh, you already got it here? I was gonna say bump it to 10.
Yeah, we can even bump it up to 10.
Let's bump it to $10 an hour for the average person.
I'll even give you 10.
Okay.
So we do, wait,
All right.
all this.
So 10
So we're going to
times.
do $10 an hour times 35 hours a week, because you know they're not giving you any full time.
Okay.
$10 an hour times 35 hours a week, because then they have to pay health care.
$350.
$350 a week. So we're going to multiply that by 4
And you're making $1,400
a month.
a month
So you're not even
for
You're
35 hours a week.
for 30 hours a week, because they're not going to give you 40 hours, because then they have to pay health care.
But let's just say they do.
Let's just say they do.
Let's just say they do. They say they give you 40.
We could even go 40.
And we don't even have to, don't worry about healthcare because the healthcare is not going to pay your mortgage.
So 10 times 40 is 400. We're going to multiply that by 4. And we're going to get, we're $1,000 in the red, and we haven't even started.
Yeah.
$7.25 federal minimum wage, and then depends on the state.
Okay.
We jacked it up by $350, and we're
Yeah.
still not even
So
halfway there.
$10 an hour, 40 hours a week, you're making $1,600 a month. Your payment is supposed to be 22 to 26, so we're already in the red. We definitely need that dual income. We can see it. And this is where I think Nick is saying it's not reasonable and it's illegitimate debt.
Illegitimate debt.
In-
Because it's not reasonable. The math doesn't add up.
Right.
No kids. No one can stay home with the kids for 5 years.
Yeah.
So we're going to send them to child support. Oh, wait, you got to pay for child support?
Yeah. Child support, no, not change that word. Child care.
Child care.
Child support is what happens when you.
Child support is
Yeah,
when
when this whole thing falls apart and your marriage is gone.
Exactly.
Then you're paying child support.
When Jerome Powell makes that happen, because this is illegitimate in the first place, that's when one of you is paying child support to the other one. Exactly. So that's why this is illegitimate, but we're not done.
Okay, we're not.
We have student debt.
Presumably, for those who are trying to afford their education,
Exactly.
student debt. Okay.
So, student debt is not consensual often, because you are just graduating high school and your parents say, hey, you got to go to college. And you say, yeah, sure, whatever. Say, and so somewhere along the line, some college person hands you a paper that says you're going to be $100,000 in debt. Say $100,000? No, are you nuts? Are you crazy? I can't even count to 100,000.
Right.
No, that's why I'm going to college, so I can learn to count to 100,000. I'm not doing it.
Right.
And you push it away, and your parents say, "Sign here. You're going to college because we want you to get a good job and not be at McDonald's like this guy." Right. So it's not consensual. You get railroaded into it when you're just coming out of high school. Mm-hmm. It's not really a consensual decision whether you want to go $100,000 in debt. You get pushed into it all the time. Mm-hmm. So it's not really consensual.
Now, as he's saying this, you guys know that this is Nick's philosophy. It obviously doesn't apply to everyone in the world.
Not to everyone, but the numbers apply to everyone.
Yeah, right.
Whether or not it's not so much a philosophy, it's just an examination of the numbers.
Right.
And this is part of what
How we end up falling into this situation.
how we end up falling into this situation.
Okay.
Because some people are like, yeah, I think I can pay off that $100,000. I'll be fine. Mm-hmm. That's very, very much the minority. Mm-hmm. I'm sure they exist. Oh yeah, I'm going to be a doctor. I'm going to make $300,000 a year. Sure, that's fine. Not everyone's going to be a doctor. Not everyone is going to be able to get one of these now mythical, quote unquote, real jobs. Because thanks to, again, China, not really China's fault, but thanks to China, thanks to the macroeconomic problem of U.S. trade policy.
Okay, that's what it is. It's not necessarily China or the Chinese, the people of China.
No.
We're
this is not
like,
the people of China. This
nothing.
No.
Nothing like that. He's basically talking
Nothing
about the
macroeconomic trade policy.
Macro.
The decision by Richard Nixon to open up the floodgates to Chinese slave labor. And that made all the quote-unquote real jobs, the ones that actually paid real money, that made this housing doable.
Yeah, go away.
They all got shipped to China. And now it's McDonald's as far as the eye can see.
Yeah.
And so even if you get a real good degree, you're still going to be at McDonald's. You're still going to be this guy.
Wow, that sounds pretty
cannot.
dismal. At the end of it, as we wrap up, I'll sprinkle some positivity. Not to say this is negative, I'm just saying that this is a stark
It's a stark picture.
It's a stark picture of what many of us are going through.
Exactly.
And that's why we're having this episode, so we can kind of take a look at, the legitimate versus illegitimate debt.
Exactly.
Okay. Now, is there some sunshine over here?
This isn't really sunshine. This is just, this is the things that you can blame on Jerome Powell. And
Okay.
these are the things you cannot blame on Jerome Powell.
Okay.
So I'm just going to real quick wrap up student debt. It can be $100,000 easy when it doesn't need to be.
Okay.
Because they often charge for room and board when the dormitory building is all paid off. It's horribly over-administered. Way, a lot of waste in college campus spending, which could be cut out. It's not pay-offable because people can be in student debt until they're 50 years old.
Yeah.
It's absurd.
Yeah.
So neither of these is legitimate. And
Okay.
both of these are what's holding the American public back on a social level, on a macro level.
Yeah, interesting.
A much larger picture than just one guy.
Huh?
Legitimate.
Yeah, go to legitimate.
So
While he's firing it up, you mentioned something about the social aspect. That's really interesting. We should talk about that sometime too. Okay, but legitimate debt, here we are.
So I can blame this on Jerome Powell and his inflation and the banking industry and all the people that Bitcoin is trying to get rid of.
Right.
This we can blame.
Right. And are you mentioning Jerome Powell specifically, or just the entity?
All of them in general, they're the same.
That whole okay, got it.
All the Federal Reserve people
Yeah.
are the same deal.
Okay.
They're the exact same person.
Right, exactly.
No different. It's just Jerome Powell happens to be in the seat
right now. Right.
There was Janet Yellen, Ben Bernanke, I think Alan Greenspan did one good thing
a
long time ago.
All of them.
Yeah.
Okay, good.
So
All right.
I cannot blame Jerome Powell if I slide my credit card for something I'm not forced to do. Let's say I want some pizza.
Yeah.
You want some pizza? I want some pizza.
I want some pizza.
But doggone, I ain't got no money.
Damn it.
I used up all my Bitcoin, so I can't buy any pizza. And I used up all my dollars, and my bank account's empty. But I want that pizza.
Yeah.
Doggone it.
Yeah.
And I'm not Jerome Powell, so I can't print up a bunch of free money. What am I going to do?
Oh.
I'm going to go to Visa.
Okay.
And I'm going to tell Visa, I want that pizza. And Visa's going to say, sure, here you go, 30% interest, ha ha ha, go ahead, have your pizza. So Visa says 30% interest, which isn't legitimate anyway, but I'm not even going to go there.
I don't know what kind of card he has. I think mine's like a 12.55. But
Even 10% interest is a lot.
Okay.
But whatever.
whatever.
Interest level it is, Visa is charging absurd interest, but they will give you the pizza.
Get that pizza. And you know what? If that pizza costs $25 and I have to pay $2.50 more for it, so be it.
Then what do I care, right?
Well, who cares?
This
Huh?
is...
Tip.
Oh,
And a tip, because you got to tip the delivery driver.
but the tip is going to be in cash. No,
I don't have any cash.
Okay, you don't have
I've
any
got no
cash.
cash.
Right. All right. So wow.
So
yeah.
now we're talking about $50
I-
pizza.
yeah.
We have to tip like $10 because you drove all the way around. You can't tip it measly $2. That's that's no good.
That's no good.
So I can't with a straight face say Visa made me buy that pizza. That's stupid. That's not.
I've heard people say things like
Yeah,
that.
okay.
I
Well,
have, you know.
that I would not say it is not really consensual.
Right.
But I slid the Visa card and chose to get the pizza.
Yeah.
This is not Visa's fault.
No.
That I made the stupid decision to buy 100 pizzas and now I'm $3,000 in debt.
Okay. I got it.
Maybe that was stupid, but it wasn't Visa's problem. It is not Visa that made me do that. So,
was
social
Domino's.
stance. It was Domino's, exactly. it was. But really, social standards force you, not force, but they soft
Condition
force.
you.
They condition you
They
that
condition
you have
you.
to have a house.
Right.
They condition you that you have to have student debt because you get
Right.
railroaded into this.
Right.
And buffaloed, and that's not good.
Okay.
Not so much with Visa over here.
Okay. So that is considered a legitimate debt when you make a conscious decision that
Exactly.
you're going to buy those new stilettos, the nice
Exactly.
belt, the purse, the
Exactly.
new tires for your car stereo that you have.
That's just you going to Visa and saying, hey, Visa, I really want this thing right now.
Okay.
Will you give it to me? And Visa says, yeah.
Okay.
So,
Now where are we headed with this?
Reasonable.
Yeah, okay. What about reasonable? Yeah.
reasonable, it's a reasonable amount of money to
Yeah.
have, $50. I can pay that off. If I don't pay that off, whose fault is that?
Right.
Now it's mine.
Now it's yours.
It's not Visa's fault.
No, it's not.
So this kind of debt is legitimate. Let's say, for example, we're getting a car. And we don't have a lot of money, so we're going to get a used car.
Okay.
Right? And a used car, let's say it's $5,000.
Okay, $5,000.
For a used
What kind of car would you get for $5,000?
Two.
You get a Toyota, just because it runs so well.
Yes.
You're going for the security of a well-made car.
Yeah.
Okay.
I will die before that car dies.
Yeah, that's true. That's true.
You could get a cheapo electric car for $5,000.
Yeah.
You could do all kinds of stuff. This is not something you are forced to do. I mean, technically you are, unless you want to ride the bus all day, but that's a different matter. If you want to ride the bus, you can ride the bus. And it's not an unreasonable amount of money. Because $5,000 spread over 5 years is, maybe $100 a month.
And
That's something you can live with.
Right.
So this is not holding anyone back on a social level. These are personal choices that do not shackle people
Right.
in debt for their entire lives.
Right.
Bitcoin was not invented to get rid of this. Bitcoin was invented to get rid of this. Because this has only gotten to unsustainable levels because of inflation in the first place. It's not the housing market itself that created these unsustainable levels of pricing. It's inflation and the housing market. So, looking at the cost of housing, housing may have been, $20,000 a while ago.
Right.
And it wasn't that big a deal. It was both consensual and payoffable. But now it's not. So,
Interesting.
that is basically where that is going, and this is really the important part behind Bitcoin.
Okay.
Because Bitcoin is going to get rid of this kind of stuff. And in part get rid of Visa, because people get in trouble with Visa too.
Right.
It's just, this is not as crazy as this kind of stuff.
Right.
If I get in trouble with credit card debt, that's a personal problem. If I go to buy a house and it's $500,000 and I can't pay for it, that's not my fault. That is a systemic problem.
Wow.
Same with student debt. Same deal. It's not my fault that college is $100,000. That's a systemic issue.
Yeah.
That didn't originate with me. These things originated with me, and they're not crazy.
So I'm going to put a recap on this, right? The summary is this. As far as debt, there's legitimate debt and there's illegitimate debt.
Yes.
According to Nick, he says that a lot of the consensual, the conditions are consensual and reasonable. He's saying that in order for us to get into something like housing, we've been indoctrinated in a sense. It's become such a high social norm that we almost are hypnotized into trying to achieve this particular thing. Now, some may argue if that's a consensual thing or not, like, whatever the case is, but still, he put it in this category, says that once we fall in this situation, you typically will get a house because you want to have children. When you get into the children situation, you're going to be caught into this cycle of debt. That you have been manipulated into purchasing, buying into this particular, I don't want to say fantasy, but very much the American way.
Exactly. This is supposed to be the American dream.
Okay, the American dream.
All of a sudden, the American dream
is the American nightmare.
It's nuts. You are priced out of it because you can't afford the American dream because you were supposed to get a quote-unquote real job, which you could have done back in the 50s, 60s, maybe even the 70s.
Right.
But now, because of other problems, it's McDonald's as far as the eye can see, and your McDonald's is not going to get you this.
No, unless you live in that house where all the kids play. And then the legitimate debt is things that you decide to agree on doing. So there's your lesson today, ladies and gentlemen, the difference between legitimate and illegitimate debt. And whatever it is, whatever you walk away with this, just be mindful of what you are doing as far as making an agreement on whatever debt you are going to sign up for.
Exactly. And buy some Bitcoin so that when Bitcoin goes to $100,000, your student debt is eliminated and your housing debt is also eliminated. That is the point.
All right.
That is why we have Bitcoin for this, not necessarily for this.
Okay. Thanks.
Cool.
Cut.
That was a big one.